Welcome to Markets Now. I'm Michelle Rook with Brad Kooima with Kooima Kooima Varilek. Well, the grains are mostly lower, except for nearby corn, I think, is fractionally higher, but everything else in negative territory over in the livestock futures. Hogs to the plus side, cattle are lower. And Brad, let's talk about cattle. Some new lows for the move here. How much of this is the story on high path avian influenza in the dairy herd versus the cattle on feed report carryover?
Thanks for having me on. I just assumed that we weren't doing it today, huh? It's more fun to talk about the other kind of bull markets, but you know how much of it is. I guess my feeling would be that number one is still the cattle on feed report. The placement number was bigger than expected, and we had expected a big number, right? We were guessed at 106 and came in at 110. So you've got that, and when you looked at the weight, well, at least I do, when I look at the weight breakdown of that, it was skewed toward the heavier cattle, which makes that number even a little more troublesome. You know, it's always easier for, I think, the industry to accept, well, if they placed a bunch of light calves, it was because it was dry, whatever, they get handled differently. They won't be fat for a long time. We won't worry about those. Now it looks like we've got plenty of cattle here for the summer, and it's concentrated in the north. Placements were up 18% in Iowa. Yeah, I know. I live in Iowa. I have a hard time believing that. Also, placements in Nebraska, 116%, which is a record for them. 116%. Yeah, hard to believe that there's even enough pen space for that, right? Now, you remember January was terrible weather, and yet Nebraska was up then too, allegedly. So apparently they found a lot of holes and a lot of places to put cattle in Nebraska and Iowa. We'll see whether that pans out or not. I remember talking about this placement number before. You remember that in October and November, and we were supposed to have 2% more, and we're almost done with this first quarter, and we're over 5% less actual slaughter. So some of us number crunchers are a little frustrated that some of this stuff is not lining up. So yes, it's part of the thing that got us off on the wrong foot is that, but certainly this dairy story, it's been in the market for over a week. You know, we've been hearing about it at various scale, downplayed certainly initially, and still being downplayed, and maybe rightly so. But it is not getting contained. It's unfortunately it's spreading to other states. You know, now it's in Kansas and it's in Michigan as well. Of course, hopefully we can get our arms around this deal. But the worry from why do we care about that with cattle futures? Well, the worry is that this would increase the cull rate in dairy cows. And if these cows are sick, that's what they're trying to do, trying to get them slaughtered because it's safe to go into the consumption, right? Would that increase, you know, the amount of beef that we have to move through the channels? Now, one would think we could handle that little blip, that bump, you know, but I've been around long enough to know that when it comes to cattle, uncertainty is not helpful to the market. So let's get through this phase. I know that the case of Michigan, where there's a lot of big, huge dairies, they are aggressively and actively vaccinating. They've got a vaccine that's supposed to keep you from getting it, these cows from getting it. That won't help the ones that have it, but hopefully, you know, in another week or so, you and I can talk about, you know, okay, we got this in our rearview mirror now, and hopefully it's not a giant market factor, but certainly month end and quarter end are I think working into this deal too. You obviously you're getting fund selling because the chart looks rotten, and they're long. So, you know, part of it, unfortunately, is a function of you call it money flow, and I think that's the right thing to call it, where people are liquidating what looks to be a bad technical position.
Yeah, and the sad part is we just came off a week of record cash trade, didn't we?
You ever heard that phrase? You market tops the day the news is the best. Record cash here too. It's the highest I've ever personally sold cattle was last week. That should help cushion this thing because the market is such a steep discount. I'm not sitting here predicting a deal like you had last fall where the market broke $30. I don't think that that's the case at all. But we could follow through a little more from here. But I think you're still going to be stabilized by the fact that we're current in the north at least, and hopefully as we move closer to Mother's Day, get past Easter, you know, demand shifts again, and hopefully we can, you know, get by this thing without too big of a break. I guess that's what I expect. But, you know, to get the summer months back into the mid 170 range, that's still a pretty big price for summer cattle.
Yeah. Hopefully you're hedged at these levels, right?
Right. Well, you and I have been talking, pretty cautiously for a month here on this show anyway. So hopefully the guys are done some risk management still. I hope so.
Okay. You mentioned in a month and a quarter, but we're also into report time. And of course, the Hogs and Pigs report is coming out on Thursday, amongst all the other data dump that we have going on. But what is that market trading right now? The funds have gotten pretty long. Are they just pushing? Is that just a money flow thing, or is there some fundamental legs underneath this market?
I think a little bit of yes to all of that. I guess, first of all, I do think that there is, it slays me to think that these funds actually do this, but there still is a relationship between these guys that like to trade the cattle hog spreads. I haven't figured out how to do it. But
yeah, and you saw that yesterday, didn't you?
Absolutely. When there's a severe weakness, especially, or strength in one or the other, it seems like the opposite happens in the so sharply lower cattle often leads to a little better in the hogs. But I do think that there is some fundamental basis here to be a little encouraged. The numbers have gotten a tiny bit tighter, and yeah, it's a fine line between too many and not enough, especially in that market where there is no cash market. But the big thing that I think that we sense is different here, and this is a bit at the expense of the cattle thing, is that you're getting a real aggressive pork feature. You're getting a lot more interest here, I think, and I think it's economically driven. There seems to be a better demand base here for this more economically priced pork product here than what some cases of the beef. Now, I'm not saying the demand on the beef is erect, but it's that time of year too, right? So a little better demand. And I think, the anticipation that maybe these numbers get just a little bit tighter, particularly when you get into June, July. Yeah, I've got a little enthusiasm. I think maybe you can get back into that 104, 5, 6 range there in the summer months. Yeah. We'll see.
Yeah. And of course, you had higher cutout values, kind of backing up what you said about demand, as well as monthly cold storage report, if you really buy into that, was down as well. And so maybe we're chewing through some of that supply. Over in the grains, corn keeps trying to take out resistance areas. It's moving pretty sideways. And it's really, is it all about what we see in these reports on Thursday or not?
I wish that we didn't have them Thursday. These things come at the most inopportune time.
Right.
I think
in a month, in a quarter, you just got too much stuff going on, really.
And a history of extreme volatility for this report. Yep. And if you just leave the corn by itself, Michelle, we're doing some things here. I mean, the basis is getting tighter all around me here. And you look at the margins for these ethanol guys, right? I mean, record margins, it looks like on paper anyway. Well, they're going to crush the snot out of that stuff. And if you believe the cattle and feed reports, we got more of them to feed. It seems like you got a demand-driven deal going here on the corn, and look at the tip of the spreads, so basis, spreads, market, those are the three things you should write down, on the grains. And then now we'll have this report. So now we got to make sure that we got 3 million acres less planted of corn and 3 million more of beans. That's basically what the estimates are. I rounded it off. Okay. But,
right.
And we've all said the same things, right? Well, poor commodity prices, high input costs on the corn, 9% interest, they'll plant something that's cheap. I agree. But that's a big swing already, 3 million acres. So, I could sit here and tell you the bullish story on the corn with a level of confidence, but, with the report coming out, I'd say anything is possible there. But, around here, they plant corn anyway. That's just different here because we've got such a high needs base of it, between ethanol and between the livestock numbers. So I won't see it here, but maybe in the fringes, they'll plant beans instead of corn.
Yeah. But some guys still think they can bushel up with corn, so they like to plant it.
Well, and look at the yield bump you've had in the corn, because of technology compared to the beans, right? So I get it. And apparently we can raise a record corn crop without rain even, so see last year, right? We'll see. I just don't like that those numbers drive the bus for 4 months now, but it is what it is.
No, you aren't alone. There's a lot of people that do not like that report. That's for sure. All right. Thanks, Brad. Brad Kooima with Kooima Kooima Varilek. That's markets.